Hello everyone, my name is Kurt Robin Valiada Dayet, and with me are my group mates, Michael Siliona, Gail Coro, Princess April Diquino, Celine Dalusong, and Noraima Dumpa. We are the Group 2 and we are tasked to discuss the introduction to taxation and the tax environment in the Philippines. Let's begin!
General principles provide the basis of rules of conduct and are sometimes rules of conduct themselves. Moving forward, here are the general principles of income taxation in the Philippines under the Section 23. First, we have a citizen of the Philippines residing therein or occupying the Philippines is taxable on all income derived from sources within or without the Philippines. Examples are the people who are selling in the Google market. Small or big establishments are all taxable depending on the level of their income. Second, a non-resident citizen is taxable only on income derived from sources within the Philippines. In other words, the one who is not a citizen and who is not resident of the Philippines but deriving income as employee in the Philippines is taxable. However, Philippines have an effective tax treaty on this, so as to avoid double taxation as long as they have effective DTA or double tax agreement with the Philippines. Third, an individual citizen of the Philippines who is working and deriving income from abroad as an overseas contract worker is taxable only on income derived from sources within the Philippines, provided that a seaman who is a citizen of the Philippines and who receives compensation for services rendered abroad as a member of the complement of a vessel engaged exclusively in international trade shall be treated as an overseas contract worker. Fourth, an alien individual, whether a resident or not of the Philippines, is taxable only on income derived from sources within the Philippines, whether it constitutes the sole source of their income or in combination with salaries, wages, and other fixed determinable income. Is required to file an income tax return on or before April 15 of each year, covering income for the preceding taxable year. The tax year runs from January 1 to December 31 of each year. By the way, an alien individual is an individual who is stateless or is a national of another country and who lives in the Philippines with no definite intention to stay for long, but who is not a mere transient or sojourner. Potentially falls into this category is an expatriate working in the Philippines on a contract for an indefinite period. Fifth, a domestic corporation is taxable on all income derived from sources within and without the Philippines. A corporation registered and existing under the laws of the Philippines is referred to as a domestic corporation. It shall be subject to income tax based on its operational income at a rate of 30% based on the taxable net income. Examples for these are Ayala Corporation, BDO, Unibank, PLDT, San Miguel, Nestle, etc. For the compliance requirements, payment of corporate income tax is made through a self-assessment system, where the taxpayer files a tax return reflecting the revenues, deductions, and the tax due. The annual income tax return is due on the 15th day of the fourth month following the close of calendar or fiscal year. Here's the corporate income tax rates apply to domestic corporations. In general, on net income from all sources, we have 30%. For minimum corporate income tax, we have 2%. For proprietary educational institutions and non-profit hospitals, and net income, if gross income from unrelated trade business and other activities does not exceed 50% of the total gross income from all sources, we have 10%. For non-stock non-profit educational institutions, all assets and revenues used actually directly and exclusively for educational purposes and other non-profit organization is exempted. Lastly, a foreign corporation, whether engaged or not in trade or business in the Philippines, is taxable only on income derived from sources within the Philippines. Example, foreign corporations engaged in trade or business in the Philippines through a branch office are taxed in the same manner as domestic corporations, except on capital gains on the sale of buildings not used in business, which are taxable as ordinary income. But this is only on Philippine source income. Income is considered to be sourced in the Philippines if the income is derived from property or activities within the Philippines. The tax base for domestic corporations and resident foreign corporation is taxable income, gross income less allowable deductions, 30% regular corporate income tax or gross income 2% minimum corporate income tax or MCIT, whichever is applicable. However, the 2% minimum corporate income tax is not applicable to non-resident corporations. That's all for general principles. Thank you.
I will report about what is taxation. There are three inherent power in our country, which are the police power, eminent domain, and taxation. So we will talk about one of the inherent power in our country, which is the taxation. What is taxation? Taxation is a procedure through which the sovereign, through its legislative body. Taxation is also defined as the power of sovereign to impose burdens or charges upon persons, property, or property rights for the use and support of the government to be able to discharge its functions. It is a method of allocating government expenses among those who are fortunate enough to profit from it in some way, and must bear its cost as a result. The Supreme Court of the Philippines described taxation as a symbiotic relationship in which taxes are paid in exchange for the government's protections of the citizens. Taxation, imposition of compulsory levies on individuals or entities by governments. Taxes are levied in almost every country of the world, primarily to raise revenue for government expenditure. It is also the collection of the share of individual and organizational income by a government under the authority of the law. Aspect of taxation. Aspect of taxation is the subject to constitutional and inherent restrictions. The power of taxation is regarded as supreme, unlimited, and comprehensive. Although taxation is referred to as the most powerful of all government authorities, this does not imply that it is superior to government's inherent powers. Rather, it means that it is supreme in terms of taxation subject selection. Taxation is also regarded as unlimited, as tax does not lose its validity only though it controls, discourages, or even definitely deters the activities taxes. Taxation is also said to be comprehensive, as it covers persons, businesses, activities, professions, and rights and privileges. There are two aspects of taxation, which are the levying or imposition of the tax, which is a legislative act, and collection of the tax levied is essentially administrative in character. Levying of the tax means the imposition of requires legislative intervention. In the Philippines, the tax is levied by the Congress. Levying deals with the provision law which determines the person or property to be taxed, the sum or sum to be raised, the rate of the tax, and the time and manner of levying, receiving, and collection of the tax. Collection of the tax, on the other hand, means constituted of the provision of law which prescribe the manner of enforcing the obligation on the part of those taxes. It is essentially an administrative function.
What is the purpose of taxation? So obvious reasons are financing government operational expenditures, and to execute national socio and economic development objectives. Taxation can be utilized in controlling the economic activities and situations. With taxation, the government can aid poor-performing business sectors. Conversely, the government can limit or discourage certain businesses through imposing heavy taxes. Example was what happened during the implementation of the train law, where sweetened beverages were subject to sin tax, which eventually discouraged the people for purchasing such good, which then slowed down that certain sector of the good. And taxation is essential in protecting local industries from foreign competition through imposing high custom duties on imported goods. Example, in order to encourage people to purchase local goods to increase GDP, the government usually lay high taxes for important goods such as branded bags. Taxation can be a key to reduce inequality in wealth within a company. Example is what happened with the train law under its goal for a progressive taxation. So to narrow it, taxation's purpose is for government revenue, repricing, and lastly, redistribution of economic wealth. So, and the objectives of taxation are regulate, improve revenue, regulate imports and exports, economic development, and increasing employment rate, and reduction in domestic imbalances. So, the essential characteristics of a tax are: it is enforced contribution. Paying tax is not voluntary in nature, and the imposition is not dependent upon the will of the person taxed. And the second one is, it is generally payable in cash. It means that payment by checks, promissory notes, and other means that are not in kind is not accepted. So that wraps up my report about the purpose of taxation. Thank you and God bless.
I will discuss about the three underlying theory and bases of taxation. We have the lifeblood theory, necessity theory, and benefit received principles. Lifeblood theory, like the human blood which acts as a support to every human organ, so it could perform every duty inside the body. Thus, tax acts as the blood which supports government and the country. With that means, tax is the lifeblood of the government and should be collected without unnecessary hindrances. Taxes are what taxpayers pay to have civilized society. Without such, the government would be paralyzed for lack of motive power to be active and operate. These are the illustration of lifeblood theory. Collection of taxes cannot be enjoined by injunction. It means that tax collection cannot be stopped by the authority. Taxes could not be the subject of compensation or set off, because the government and the taxpayer are not mutually creditors nor debtors to each other, and a claim for taxes is not such a debt, demand, contract, or judgment as it's allowed to be set off. A valid tax may result in destruction of the taxpayer's property. Taxation is an unlimited and plenary power. Let's talk about the necessity theory. The power of taxation in the existence of the government is important because without taxes, government cannot fulfill its mandate of promoting the general welfare and well-being of the people. That means the government cannot run without the means of paying its obligation. This means it has a right to compel all its citizens and property within its limit to contribute. Thus, people will contribute to a means of taxes so that the government will exist and the government can operate. It is a necessity, burden to preserve the country's sovereignty and a means to the citizenry. Such as the government will give protection from the terrorists and invasion, government services and agencies, gives free education, and etc. The obligation to pay taxes rests upon the necessity of money for the support of the state. For this reason, no one is allowed to object or resist the payment of taxes. And lastly, we have benefit received principles. This principle serves as the basis of taxation and is founded on the reciprocal duties of protection and support between the states and its inhabitants. Means that the government and its citizens have an obligation to each other. Citizens are obliged to pay tax to the government, and the government is obliged to give benefit, welfare, and protection to its citizen. One is compensation or consideration for the other, protection for support, and support for protection. It is also known as symbiotic relationship. This is the rationale of taxation and should dispel the erroneous notion that is an arbitrary method of an exaction by those in the seat of power. It doesn't mean that the government forced the individual to pay taxes just to give it to those in the seat of power. But the taxes are used by the government for the benefit and give services to the citizen. Taxpayers receive benefit from taxes through the protection the state affords to them. For the protection they get arises their obligation to support the government through the payment of taxes. However, it does not mean that only those who are able to and do pay taxes can enjoy the privileges and protection given to a citizen by the government. In fact, from the contribution received, the government renders no special or commensurate benefit to any particular property or person.
The classification of taxation. First classification is as of the subject matter or object. A. Personal poll or capitation, tax of a fixed amount imposed on individuals residing within a specified territory without regard to their property or the occupation in which they may be engaged. Example of this is community tax or cedula. B. Property. A tax imposed on property, whether real or personal, in proportion either to its value or in accordance with some other reasonable method of apportionment. Example of this is real estate tax. C. Excise. A tax imposed upon the performance of an act, the enjoyment of a privilege, or engaging in an occupation. The term privilege tax is often used. Example are the income tax, all taxes on the business and occupation. Note the excise tax are not to be confused with the excise taxes imposed by the NIRC 6. Second classification is as to who bears the burden. A. Direct. Tax which is demanded from the person who is intended to pay. Example of this is community tax and income tax. B. Indirect. Tax which is demanded from one person in the expectation and intention that he shall indemnify himself at the expense of another, or tax which the taxpayer can shift to another. Example of this is value-added tax. Third classification is as to the determination of amount. A. Specific. Tax of a fixed amount imposed by the head or number or by some standard of weight or measurement. It requires no assessment other than a listing or classification of the object to be taxed. Example are excise taxes on distilled spirits, cigarettes, and others. B. Ad valorem. What is an ad valorem tax? An ad valorem tax is a form of taxation based on the value of the transaction or a property, either real estate or personal property. It is generally calculated as a percentage of the value of the property rather than the size, weight, or quantity. Ad valorem is Latin for according to value. Fourth classification is as the purpose. A. General, fiscal, or revenue. Tax imposed for general purposes of government, example to raise revenue for governmental needs. An example of this is the income tax and taxes of the business. B. Special or regulatory. Tax imposed for a special purpose, example to achieve some social and economic ends, irrespective of whether revenue is actually raised or not. An example is the protective tariffs on imported goods. Tariffs are used to restrict imports, especially they increase the price of goods and services purchased from another country, making them less attractive to domestic consumers. Fifth classification is as authority imposing the tax. A. National. Bureau of Internal Revenue. The Bureau of Internal Revenue, or in Filipino, Kawanihan ng Rentas Internas, or BIR, is an agency of Department of Finance. BIR collects more than half of the total revenues of the government. The purpose of Bureau of Internal Revenue is mandated by law to assess and collect all national internal revenue taxes, fees, and charges, and to enforce all forfeitures, penalties, and fines connected therewith, including the execution of judgment in all cases decided in its favor by the Court of Tax Appeals and the ordinary courts. B. Municipal or local, which is the local treasurer's office. City treasurers are primarily responsible for managing the revenue and cash flow of the agency, banking, collection, receipt, reporting, custody, investment, or disbursement of municipal funds. Sixth classification is as to graduation or rate. A. Proportional. Tax based on a fixed percentage of the amount of the property income or other base to be taxed. Example are the real estate taxes and other percentage taxes. B. Progressive or graduated. Tax rate of which increases as the tax base increase. Example is income tax, estate tax, and donors tax. C. Regressive. Tax the rate of which increases as a tax base increases. We have no regressive taxes. Why regressive tax is not good for our country is because regardless of the taxpayer, a regressive tax affects those with low incomes more severely than individuals with high incomes. While taxing everyone at the same rate may be reasonable in some contexts, it is perceived as unjust in others.
Hi, it's me, Kurt, again, and this time I'm going to discuss what is the Cytus of income for tax purposes. But before we go further to Cytus of income for tax, let's discuss what Cytus of taxation means. Cytus of taxation literally means a place of taxation, the country that has the power or jurisdiction to levy and collect a tax, in our case, the Philippines. Cytus is a Latin word for situation or location. It basically means that the place where to tax the income or property of an individual. Its literal meaning pertains to the place of taxation and its limitation to the taxing power. The Cytus of taxation allows the government to classify actions and determine whether it's taxable within or without the Philippines. Further, this helps the country to separate the taxation powers of foreign countries. The absence of such provision would lead countries to tax anyone inside and outside their jurisdiction. The general doctrine or accepted rule about the placement of tax is that taxing cannot go beyond the territorial limits of the taxing authority, but within such limits, it may tax person, properties, income, or businesses. Now, in the Philippines, there are factors determining the Cytus. The taxation jurisdiction or status will depend upon various factors including A. The nature of the tax and the subject matter hereof, which may be a person, property, act, or activity. B. The possible protection and benefit that it may accrue both to the government and the taxpayer. C. Domicile or residence. D. Citizenship. And lastly, E. Source of income. 2 or 3 of these factors may apply depending on the tax law, be it on property tax, business tax, or income tax. However, in this discussion, we will focus more on income tax. Example is in income tax, factors are nationality, source, and residence. So this is our basis. Whether the person is a national of the Philippines, whether the individual is a resident of the said country, or whether his or her source of income is within or without the Philippines. Now, we are finally here in the Cytus of taxation on income tax. The basis of the Cytus of taxation with respect to income tax, the jurisdiction to impose and collect the same is based upon the fact that A. The recipient of the income is a citizen or resident of the Philippines. See Section 23, 24, and 27 of the National Internal Revenue Code. B. The income is derived from the sources within the Philippines. See Section 42A of National Internal Revenue Code. Now, the income tax is founded on the protection afforded by the state that the recipient of the income in his person, in his right to receive income, and in his enjoyment of it when received. These are rights and privileges attached to the domicile and citizenship. Now we are down to the Cytus of Taxation on the nature of income tax. First nature is interest. Interest income are gained through loans. The Cytus of the interest income is the domicile or residence of the debtor. So if the debtor or nangutang is a resident of the Philippines, then the interest income of the creditor or nagpautang is considered within the Philippines and is subject to tax. Now, for example, Celine Hilot, residing in the Philippines, loaned 100,000 to her cousin Kurt Swift, who is a resident of the United States of America. Interests paid by Kurt to Celine are considered foreign-sourced income. So this interest income may be exempted from taxation on the Philippines since the debtor, Kurt, is a non-Filipino resident. Second nature is dividends. Dividends received from a domestic corporation is equals to earned within the Philippines. Dividends received from a foreign corporation whose income earned in the Philippines is 50% or more of its total income, it is considered earned within the Philippines and is subject to tax. Dividends received from a foreign corporation whose income earned in the Philippines is less than 50% of their total income is without or it is considered without or outside the Philippines and is not subject to our tax. Sixth nature is sale of personal property. Personal properties are properties that are movable like cars, perishable goods, computer, chair, jewelries, etc. On personal properties purchased, the Cytus is where the property is sold, regardless of where the property was purchased. Example, Neki purchases skincare products in Korea and sells them in the Philippines, specifically in a store in Cebu, which she owns. The income then is within the Philippines and is subject to tax in the Philippines. In the second scenario or second type is the personal properties produced. If the property is produced in the Philippines and sold outside, partly within and partly without the Philippines. So the tax is partly within and partly without the Philippines because it is produced in the Philippines but it was sold outside. So it will be discussed earlier on our seventh nature, which is income partly within and without the Philippines. These are income from personal property or transportation produced in the country and sold outside. So what we will do is conduct pro rata or allocate the mixed source income by separating the income and expenses within and outside the Philippines and identify which are earned within the Philippines so that it will be subject to tax. So that is our seventh nature. Now to end my topic, knowing where income originates is critical to ensure that only income taxable in a given jurisdiction is disclosed and assessed. A taxpayer who lacks this knowledge faces the risk of either failing to disclose income that is taxable in one jurisdiction or declaring money that is not even taxable in another. So that is all, and thank you.